HSBC has just announced a 74% rise in their profits and a $2 billion share buyback. Doesn't sound like Evergrande is really impacting them at all. Let's have a look. Hello everyone, Florian.Heise here and welcome to another episode of HeiseSays. Grab your stein of coffee because we need to have a look at this article from Reuters. It's discussing HSBC and their surprise 74% rise in profits and a $2 billion share buyback. Let's jump over to this screen. We can see right now they're trading at 135 and it's up 14.5% year to date. We can see that, actually we'll go out to 1 year or 5 years, so we'll make sure in 2020 they, went down a significant amount and are slowly creeping back up, everyone. Not a bad dividend yield, 3.74%, but a share buyback, well, there you go. And you may be familiar, everyone, they're one of the biggest foreign or USD denominated bonds from Evergrande. And there's this whole theory and, the Duma prophecy going through that Evergrande's going to collapse all of China and it's going to collapse all of their economy and it's going to collapse all the banks. What does a 74% rise in profits tell you? I suspect that they may be able to manage a little bit of a loss. So, this is from Singapore. HSBC Holdings reported a 74% rise in third quarter profits, beating market expectations as the Asia-focused banks realized cash set aside for expected bad loans that had not materialized. So they released that cash, not realized. They released that cash for bad loans. Remember, we had the same thing here in Australia with banks setting aside money for bad loans. The bank posted pre-tax profit of $5.4 billion for the quarter to September versus $3.1 billion a year earlier, and the $3.78 billion average estimates of 14 and analysts compiled by HSBC. HSBC also announced a share buyback of up to $2 billion as it continues to return excess capital to shareholders in place of investing the cash in the business. Now that's an interesting consideration. When businesses this size, they're not really growing anymore. I mean, HSBC tried to grow, didn't it? Tried to go into other markets, and we were reading about how it shut down in the US and other parts of the world, all their branches. Here in Australia too. So it looks like they cut the dead weight, everyone. It doesn't look like they were in any trouble. HSBC released $700 million in cash it had put aside in case pandemic-related bad loans spiked, as opposed to the same time a year ago when it took an $800 million charge in expectation of such sour debts. In reality, economic conditions have improved, while loans have performed better than expected, the bank said. The results from the London-headquartered bank come as rivals such as Citigroup are riding an M&A boom while fending off weakness in the lending business. So there we go, everyone. And so I'll just bring up this chart here to show you that HSBC Holdings are one of the biggest US dollar bondholders for Evergrande. And that interest payment has just been made at the last moment. Now, of course, you've got HSBC, you've got Bank of Canada, you've got BlackRock and others holding this debt. It's not going to be so much that they're completely dependent on it. There's an element of risk investing in Chinese developers, and I'm sure that the companies that are doing this understand that risk that they're taking. So while, everyone loves to talk up the fact that this is going to be a new Lehman Brothers, I'm just becoming more skeptical, everyone. Frankly, I'm becoming more skeptical. Don't get me wrong, it's going to shake up the housing and property sector in China. That's going to flow through and have impacts here on Australia as well. But I don't think it's going to be another GFC. You can see all the banks, even here, HSBC, have gotten significant amounts set aside for these bad loans. Our banks here in Australia are in a much better position. So what do you reckon? Everyone, thanks for watching. Check out this video I did here about Evergrande's biggest bondholders if you're interested to see who holds the biggest bonds, what risk that represents, and how much of a proportion of their portfolios that is. Thank you all for watching. Like, share, and subscribe, and I will see you all next time. Bye for now.